So price trades down into that 1 hour OB, right? And we wait to see if there's a shift in market structure. Okay, it moved, shifted the structure, we had displacement. Okay, that will be an entry, but you can see we are already outside our key zone. Okay, so but primarily for this series, we are going to be focused mainly in our time of day and within our daily trading range time window. Okay, so our time of day, which is our key zone, is between this is forex, right? It's between 2 a.m. to 5 a.m. for London Q zone. Then that will be 7 a.m. to 10 a.m. for New York Q zone. Okay, so that will be the time of day, and our daily range will be between 12 a.m. to 2 p.m. right? So now you can see we didn't get an entry. Okay, if you are not an aggressive entry, we didn't get an entry within the New York Q zone. Okay, so let's say you wanted to take a short in terms of, you wanted to short down to that 1 hour OB. Okay, this would have been your entry. You have this short-term load here, price trade above this old high, traded below, that will be a shift in structure, and you can get your entry there. Okay, the last down close candle before this up move becomes a breaker block right there. Boom, you see right there, drops down, comes back, institutional order flow entry trade. You can aim for this low and possibly that OB. Okay, you can even aim for this low, you can short there and cover it here. Okay, that's one way, but we are going to try to stay away from counter trade setups. Okay, so now price trades into that 1 hour OB, moves away, comes back, hit it right there. Okay, moves away, come back, but that is between our Q zone. So now coming into our Q zone, notice how price drops down, moves away, come back, this high to this this low to this high. That will be an institutional what's it called, that will be a optimal trended entry if I'm not mistaken. Okay, so that's volume imbalance right there, you buy. Okay, let's say you missed that. Okay, you have another opportunity for an entry here, this low to that high, trace back down, OB, optimal trade entry, buy. Okay, so why are we buying? Although it is close to the, why are we buying above the New York what's it called, above the midnight opening price? Okay, because we are buying above it because the London Q zone tends to form the low of the day, right? And the New York Q zone is almost a continuation of what the London Q zone the trend is a continuation of the London Q zone trend. Okay, so in other words, we have already formed the low of the day. So we know we have formed the low of the day. Okay, and at the same time, the Q zone of the New York is usually a continuation. Okay, so this trend should keep going up, right? It should keep seeing upside, and we are bullish for the week. Okay, so that is why we are confident enough to buy above the 12 a.m. midnight. Okay, but if you go down even further down to the lower time frame, like let's say 2 minutes or 1 minute time frame, I'm sure you're going to get an entry below here. Okay, so so let's say you miss that, you are not able to get in. Okay, so now you can see this line here is that breaker block I told us about the other time. Okay, I talked about the other time. So this is that premium high of the other block, of that breaker block. Okay, so notice how we trade through it and came back to find support. So this is classic resistance broken, don't support. Okay, so this is how we frame our resistance and support ideas. Okay, so notice how we traded through the breaker block high, came back and find support at the high of it, at the same time traded into this fair value gap, institutional order flow entry trade, buy, goes up, comes back down, institutional order flow entry trades, and offers it one more time into that B figure level, which is close to that 2 standard deviation level. Okay, so that is just how you frame your trade. So the basic idea was that of all the setup was that we bought looking at this from the perspective of the power of 3, right? So we have the low, the open, the low, the high, and the close. Okay, so this is our daily range time of day. Okay, so every day we are looking to find our setup between 12 a.m. to 2 p.m. Okay, so that is just that. So that is how you frame your long setup going into your daily going into the marketplace on a daily basis for a bullish day. Okay, so you look to buy below the 12 a.m. midnight opening price, then the London close should form the high, should form the high of the day. Okay, the London close usually forms the high of the day. The London key zone opening usually forms the low of the day. Then the New York key zone is usually a continuation. Okay, so you buy below the London the opening price. Let's say you are unable to get an entry, that's fine. You can also get an entry within the New York zone with confidence that the low of the day has already formed and the trend should keep on going up. Okay, so we have basically covered three things. Okay, we'll talk about projecting our TP. Okay, and we'll talk about how to go into the day-to-day trading using the power of three. Once you have determined your bias, okay, and we'll talk about how to build up confluence to surround our trade setup. Okay, so the whole idea was that we didn't just buy here because we price traded below and below. No, we bought here, okay, because we had an order block with discount 1 hour OB. Okay, then we had an old low that was swept. The price tapped below. Okay, the price traded below, and at the same time 15 minutes favor 15 minutes OB, right? And looking at this range, we discount optimal trade entry. Okay, so that is just how you build confluence for your setups, right? So now that will be the end of the preview. Okay, now going into the that will be the end of the review. Now going into preview for what I'm expecting to do the following week. Okay, so I'm still sticking with bullish bias, of course. Okay, so I'm still very bullish on it. So now the idea is I'll be looking for higher time frame institutional level discount arrays that I will buy into to move to premium, right? So we have, as at last week, we had this nice trend line liquidity right here. Okay, so and we had this old low, so price tapped below that old low, this trend line liquidity, which will be larger on the lower time frame, then traded down into this bullish order block. Okay, so moved away. So okay, so the first time was that we sold at premium here. So the idea is sell at premium, buy at discount, right? So we had this break, we have this rejection block. So price sold off right there, dropped down into the high of that OB. Dropped down into this proportion candle. First time, okay, the very first time it dropped into the proportion candle, traded up a bit, didn't reach for that old low, broke this trend line. I came back to retest the trend line, right? So this what's it called? Bunch of traders are going to be selling that. They're going to be placing more sell orders, right? So traded down into almost reached for that order blocks. So we use the opening price, right? But traded below the previous day's low. So traded down into that OB and boom, price took off, right? So now what I'm having here right now, okay, so I'll talk about where I'm anticipating price to be reaching for as my drawn liquidity. Okay, so now currently you can see we are trading at premium. Okay, we are trading currently at this rejection block, right? And we have this fair value gap and this buy side liquidity. So I'm expecting price to keep expanding, of course, to keep going up. This is the two levels I'm expecting price to be drawn to next week. Of course, it won't be a straight movement. It won't be a straight line upwards. Yeah, it has to, since we have already traded into premium, so we have traded into premium, we should reach for some discount, right, for us to accumulate long positions. So the idea is, where are the discount arrays on the daily time frame? Okay, where are the discount arrays on the daily time frame that smart money can buy into to keep this momentum to the upside? Okay, so we just reached into this rejection block premium, so we have to reach for some sort of discount. Okay, so we didn't